Hey, fellow traders. In this video, I want to talk about how you can handle a pretty common situation where you ended up being right, but the hedge order got triggered too. Now the price is in the middle and you maybe need to work out from the inside. Depending on how you want to apply your risk, you have a few ways to go about doing this. I'll show you an aggressive way first, and then a more conservative style with a smaller amount of risk second. This way you can choose which method will best align with your risk tolerance to get out of this situation. Now, for those of you returning, I want to say thank you for all the support. And if it's your first time here, just be sure to check out the Hedging 101 playlist from the beginning. Each new video is going to build on the last one, and it'll give you quite a few different tools along the way before bringing you right back here. Alright, now it's time to head to the testing grounds. Now I've gone ahead and pulled up our last project in Forex Tester 6. If you're interested in checking that out, I've left a link in the description. But in this last situation, we were using a low risk type strategy to try to conserve our risk. This was the ending of the last lessons video. And in that situation, we took a sell and it just happened to work. But in this time, we're going to take a look at it the same way, but you got hedged. And it's going to be a pretty common scenario that you're going to run into. But let's say, for example, now you wanted to take this sell. Now, still got our buy hedge position open from earlier. This was our second time being wrong. Our first time being wrong was our initial position here. We got hedged, closed out, never got any kind of retracement, and just ultimately got hedged again. So now we're going to take our third try here. So let's close out that hedge position that's in gain. And we are going to stick with the same risk profile to try to squeeze this out. And let's say you didn't quite get it so high, but you're going to stick with that 30 pips or so of risk. So we will place that stop to equalize that 0.01. And as usual, which you'll probably say to yourself when you see this, you just barely got tapped. So now what you're going to basically do is just assume the last thing was going to continue to happen, but you're going to continue to just watch. Now we can start to see that price has lost the momentum of the uptrend. It's kind of stalled and is now starting to break down. So it doesn't look like price is going up anymore. We're going to have to handle this inside situation. Now in this example here, we are about 240 pips apart. And when you're trying to trade from the inside, your strongest position is going to be somewhere around in the middle of that area. So right now we're at about 140 pips. So that's about pretty close to the center there, close enough. It doesn't have to be specifically, but kind of being within this little range here is definitely the best idea. So if you wanted to be a little bit more aggressive now, and try to get out of this just a little bit quicker, we've already taken an analysis and we've looked at it to determine that, okay, it is likely going to be going short and continue short. We've got a lot of selling pressure here. So we're going to try to look for an entry there. One really nice entry I like to use is this type of channel. It's a real tight but shallow upward slant. It's usually a good sign things are going to continue. So what we're going to do here to get aggressive, I'm just going to add one more additional sell. So we're just going to ignore these for the time being. We're going to add one sell and we're going to place an additional hedge here to cover that and just bring it down like normal as if we were trying to squeeze. Okay, so we'll follow this along and see how that plays out. And there we have a strong push down. So I'm going to go ahead and bring this down in trail and keep that just over the most obvious points of highs in a downtrend. Stay just a little bit above it. And while all this is going on, we're just going to keep an eye on the equity. Now this one did start at $100. I usually like to start a lot of my accounts for testing and do a lot of different checks and torture tests and things like that on a $100 account. Because basically anything that's going the wrong way for you, it's going to show up immediately and be real easy to determine what's going on. But there we have it. We have basically shown the aggressive way to get out of the trade from the inside, and typically you'll want to flatten this out, especially with something this wide, and basically just start fresh. But that's gonna basically end it for trying to be aggressive. Let's back things up a little bit and see how you're going to want to handle this when you're being a little bit more conservative. So let's get these out of here. And one thing to keep in mind is that if you're trying to be aggressive and price just does not leave the middle, you could wind up with a pile of positions in here. So if you are being aggressive but price is being stubborn, you may want to try to be cautious after trying this once or twice. Because that could create a mess. So if you either find yourself in that situation or you're just simply wanting to be a little bit more conservative about your risk control, at this point, you're just going to have to be a little bit patient, a little bit more patient than normal. So what we're going to need to do at this point is cutting anything would take a pretty big loss, which would be a pretty big amount that we would need to recover in order to get back to break even. So what we're really going to need to do is just basically try to wait and see if we can get some type of indication that we might be getting a reversal. So just like we analyzed this before, we saw the loss of momentum. This is kind of a little bit smaller scale, but we have some good moderate pushes down, but now everything is kind of starting to drag out and flatten out a little bit. So from this position, you're going to have to exercise your right to close early. And basically, you're going to try to get break even or as low of a price as possible in this. If you're thinking that price might reverse from this point and you're just trying to get out of it. So, what you'll need to do in this situation is once you have your low price or break even and you're sure you want to try for a price to reverse back out of this area, you'll just close out that position there. And it'll work the same if price extends further. You'll just let it go. And when you hit that reversal point, then you will close out that position. And then we're going to do the same thing with squeezing. Like I pointed out before, you'll find yourself using this little technique quite a bit. But we'll put a sell stop in this situation below price and just continue to squeeze up. And the same as before, we're going to watch that equity and see how that changes. And once it starts to get back to our starting balance, that's when we're going to want to go ahead and flatten out. Now, in a situation like this, you can kind of keep things a little bit tighter because it's going to recover more of your equity. One thing to keep in mind, though, is you really don't want to get any closer than about 30 pips off of the price. Sometimes 35 to 40, maybe a little bit better, depending on what price is doing at that time, because we don't know exactly what's going to go on, and we've got some tight and choppy action. It's probably a better idea to keep things a little bit closer while we're waiting on our equity to return. And let's see if we can get a little bit over it. There we go. So there we have it. Now we've managed to get out of it that way. And we're being conservative, so we are definitely going to want to close this out. And once we close this, even though it's in a loss, remove that pending order, we now arrive back at or a little bit above our starting equity. So those are two different possible options that you can do that do to get out of that situation. Later on, we're going to look at some other different concepts and basically see what else we could do with those types of positions. And we're also going to take a look at more advanced concepts. We're just about finished, if not completely wrapped up with the basics. So we're about ready to start the fun stuff. I really appreciate you sticking around and watching through the whole series and checking everything out. And again, I just want to say thank you very much for all the support. you guys have given me. I really appreciate it. Now this here, you're going to want to make sure that you're really familiar with, and everything that we've talked about over this series, you're going to want to be very, very uh, familiar with. You're going to start seeing all these little pieces and how they can be applied to actual trading, because as you're going through a trade, of course, the markets are going to keep moving, so you're going to have to change your strategy up a little bit here and there. And by knowing each of these little individual pieces, what they do, how they work, how they're going to work, and how you can get them to work to your advantage, once you start trading, you'll know how to string these together so that no matter which way the market goes, you give yourself a lot of different opportunities to be able to either come out or ultimately make a profit. And sometimes you can use these tricks in a aggressive and offensive type way, to where you basically build in a compounded position, but you keep protecting it with a hedge. And then, of course, if it gets hedged, then you just start working out these techniques with that hedge, but you've already got a positive gain in the market. That's one of my most favored ways to come out. But, of course, it doesn't always work that way. So you just have to kind of be flexible and plan for the market and know that you have all these different tools to try to make something out of it. And until the next video, I'll see you guys next time. Thanks for watching.